Hey everybody, welcome back to Chipstock Investor. Quick update on Micron. The market has been finishing out the year very strong, but Micron is trying to bring us all down.
Yeah, of course, Wednesday we got the market sell-off on the Fed, indicating maybe it will be lowering interest rates a bit more gradually than what everyone was hoping for. But still, 2024 has been a good year. We closed out the year in grand fashion. Micron, though, let's talk about this. Perhaps you're familiar with our semiconductor industry flowchart that we've been sharing now for, gosh, 2 years, almost 2 years. We have our 2025 refresh on this coming out very soon before the end of 2025. Micron, of course, is an IDM, integrated device manufacturer. They design and manufacture all things memory chips.
Before we dive into the nitty-gritty details, just want to remind our viewers that we have a membership, Semiconductor Insider, especially as we're going into 2025. We're going to be releasing some new content exclusive to our members. You can join now before the end of 2024 for just $5 a month. In 2025, that membership price goes up. Let's jump back in time just a few months to Micron's outlook that they provided for memory chips, DRAM chips specifically. They said that in 2024, the demand outlook improved because of that strength in data centers. And in calendar year 2025, Micron said DRAM and NAND industry bit demand growth to be around mid-teens percentage.
Okay, 3 months later, here's the most recent outlook for memory chip demand. This was for the Q1 fiscal year 2025 quarterly update that just came out. DRAM growth still expected to be in the high teens percentage range for this year and mid-teens percentage for 2025. That's good news. A lot of this is being driven by that HBM, high bandwidth memory, which are essentially just stacks of DRAM chips on top of each other to help with AI and accelerated computing infrastructure from NVIDIA, of course. So that outlook is just fine, but here's where the market maybe, I guess, got thrown a curveball. NAND bit demand growth for 2024 and 2025 is now a bit lower than prior expectations. A lot of this is being driven by slower recovery in consumer devices, especially PCs, laptops, and smartphones, and ongoing inventory adjustments for those end markets. Casey, it's almost like everybody forgot Micron does a lot of other memory chip supply outside of AI.
That's exactly what happens.
Okay. Anyways, we're going to come back to that in just a moment. In green, though, there at the bottom, there's a bit of a call out for one of your top picks from this past year, right?
Yes, absolutely. Micron said that we should expect high capacity NAND solid state drives to start displacing capacity hard disk drives in the data center. What does that mean exactly? If you haven't caught it yet, check out our video on Pure Storage that we did recently, because Pure Storage and Kioxia are collaborating to help a hyperscaler get NAND flash memories in their data centers. Historically, hard disk drives have been the lifeblood of memory in data centers, but there is going to be some push towards these flash drives, which is a big deal.
And who is that Pure Storage hyperscaler customer? Over on Semiconductor Insider, we've had some discussion on this. It seems like a lot of folks over there think it could be Oracle. Oracle, of course, making a big push into the data center race. Seems like a pretty solid conjecture to us. It could also be Microsoft Azure, Alphabet's Google Cloud, Amazon AWS. We don't know, but the point is lots of demand for NAND chips. However, and this is important, Micron and the other memory chip suppliers have a lot of other end markets besides just data centers, and especially those AI and accelerated computing data centers. And that is what caused downbeat mood on Micron stock following this latest update. Casey, break it down for us. Everything other than accelerated computing and AI.
Yes, all of these other markets have been in a slump. We expect that consumer and cloud and enterprise are at the start of a new growth cycle. Auto and industrial is still at the bottom. So all of those markets We would have really liked a sharper recovery, but we're actually just seeing more of a U-shaped recovery. It's just taking much longer for those cycles to end their slump and get into a recovery.
Yeah, and specifically for Micron, we'll show you their guidance for their next quarter, Q2 fiscal 2025, which corresponds roughly with the beginning of calendar year 2025. They said some of the consumer products had a big inventory correction. It sounds like, in particular, maybe the ramp up of these new PC and laptop AI specific models. Think like Qualcomm's new Snapdragon X Elite powered devices, these AI PCs, as Microsoft is calling them, maybe not selling as quickly as what Micron had previously been expecting. So a little bit of an inventory correction there. Micron said it should be temporary and growth should resume later in 2025. Before we get to that outlook, though, and our assumptions for Micron in this next year, let's go back to the CapEx guidance. Capital expenditures, that's spending on property, plant, and equipment, and especially equipment, manufacturing equipment, on companies like Lam Research.
Again, this was their Q4 fiscal year 2024 outlook. 2025 CapEx, they said, would be meaningfully higher and at around the mid 30% range of revenue. You can see we broke that down. In fiscal year 2024, CapEx to revenue was 32%. Here's the update that they provided here in Q1. They expect in fiscal Q2 CapEx to be around $3 billion, and they expect to spend about $14 billion in 2025 overall.
And that definitely will put Micron in that mid 30% range of CapEx to revenue. And remember, this is a big jump in CapEx because Micron's revenue is still growing quite dramatically on a year-over-year basis as they come out of the bear market. And so Micron's hiccup here in this last quarter with the stock, as well as woes over at Intel, which have been well documented, and in general, just slow manufacturing activity, has a lot of investors worried about, in particular, the health of the Fab 5, including Lam Research, which historically is one of the biggest manufacturing equipment suppliers for memory chip makers like Micron. The point is here, though, folks, Micron, yes, some of their revenue recovery has stalled out just a bit, but that CapEx spend still has to go in place, especially as Micron starts building those new facilities that they got US CHIPS Act awards for, like the facilities in upstate New York. So overall, a lot of bumpiness in the market right now, a lot of uncertainty, but we think the Fab 5 and Lam Research in particular, our pick for playing the memory market recovery, are going to be just fine.
Here is Micron by the numbers for this quarter. We'll key in on revenue. Revenue is $8.7 billion. And then also look at that earnings per share at $1.79 earnings per share. Now let's take a look at the Q2 2025 guidance. You can see revenue is going to drop down to $7.9 billion at the midpoint, and earnings per share right around $1.43. So a sequential decline.
Mm-hmm. Not what the market was expecting. Casey, is this seasonality or what's up with this? This really doesn't look good when we were expecting a big upcoming 2025 for the memory chip market, driven by all of that AI demand. What happened?
Yes, part of it is seasonality. However, as you mentioned earlier, a big part of Micron's business is not focused on AI. It's focused on those other end markets, which are, again, just coming out of a slump.
Mm-hmm. Yeah, okay. So slower recovery expected. Micron's commentary sounded like maybe by Q3 of their fiscal year 2025, they'll be back in sequential growth mode again. We'll monitor the situation. Of course, we'll be talking about this. Micron is a pretty good proxy for the overall health of the semiconductor industry. One question that continuously comes up over on Semiconductor Insider, though, is eventually, with all of this demand for high bandwidth memory, HBM, lots of AI and accelerated computing, surely Micron and the other memory chip makers like Samsung and SK Hynix, mentioned Kioxia's deal with Pure Storage earlier. They just had an IPO in Japan that went pretty well. Surely AI means less cyclicality for Micron. The answer is absolutely no. They're going to remain one of the most volatile and cyclical businesses. And we're not talking about the stock price either. When we talk about cyclicality and these end market cycles, we're talking about revenue and profitability. So you can see in this chart over the last decade, lots of ups and downs. We're still headed towards new record highs for Micron. But just be careful, folks, because this is going to be a vicious cycle, even with AI. It's not going to just simply go away. If we keep waving that magic AI wand around furiously, there's no expunging this fact. Micron is a simple ingredients producer that companies like Pure Storage or a smartphone manufacturer or a PC manufacturer or a data center operator, they buy those ingredients from Micron to cook up the final dish. Micron is always going to be a highly cyclical business because of that relationship and because of the fact that they ultimately sell a basic ingredient, a basic commodity, even if that commodity might be super, super advanced.
This chart will always look like Six Flags Colossus roller coaster.
As will this next chart. Casey, I don't even know that we want to even show this chart because it's almost completely worthless, especially at this point. But this is another thing we get. Like, Micron stock is super cheap. That makes it an automatic buy, right?
Yeah, this chart is pretty ugly. It's hard to interpret. It's kind of like looking at tea leaves. Forward price to free cash flow around 37x, forward price to earnings around 12x. Yes, by this valuation metric, it does look cheap. However, there's a lot of other factors that you have to take into consideration when looking at the actual value of Micron stock.
Yeah, after the recent dip in the stock price, we would agree on a forward-looking price to earnings basis, Micron does look cheap. And if you do believe we still have a couple of years left in this growth cycle, driven by two things. First, of course, AI, which is a new market. We showed you the chart earlier, but also those other end markets that still make up the bulk of Micron's revenue, still at the early stages of recovery. You know, Micron actually might be a decent buy now that the stock has taken a header again. The stock price has been de-risked. The valuation looks a bit more reasonable. However, do mind that high price to free cash flow multiple. The reason it's so much higher is, again, that CapEx spending. Micron is building a lot of new manufacturing capacity in the United States to friendshore and onshore some of their operations. They do see a lot of new demand coming for HBM for all that AI. And so that's where a lot of the CapEx is going this year. But just mind that elevated CapEx spend because it can cause some pretty wild gyrations in the stock price. So I guess maybe the ultimate message here, Micron looks more attractive to us now than it has in quite some time. Some of you are going to be quick in the comment section to tell us that we've been dogging on Micron for a while. Not really. We've been dogging on Micron's valuation, but at this
Man,
point,
I like Micron.
Casey likes Micron.
They're from Idaho.
Which is weird. Different story. Just be careful about yellowing into the stock, I guess, is the ultimate message, right?
Yeah, that's the key takeaway.
Yeah, take it easy.
Take it easy. Take a deep breath.
Goose fraba.
Thanks everybody for watching this episode of Chipstock Investor. Again, check out Semiconductor Insider, link in the description below to our Ko-fi page. That Ko-fi page will get you the membership to Semiconductor Insider and get you on our Discord server where we post all of our information. I think you'll like it. Just try it. We'll see you all again soon at Chipstock Investor.